All right, everybody, we're gonna start looking at the market, see what's going on, etc., etc. All right, so this is the SPY, and you see that the last breakout was right here. So you can see right here. I think it's on 4 million, 400,000. I don't know, whatever. It's on a lot of volume over here. Not a lot, but it's a breakout nonetheless. And we're just in that range of the breakout. So as you know, what happens after a breakout, the breakout test, and then reaccumulate and all of that shit, right? So and you can see it very clearly on the Renko right here. Oh, what happened here? I don't know why it does that. So right. Anyway, you get the idea. It took out that high, right, with the breakout. Now it's pulling back, and exceptional amount of volume came in. Now I don't know what's going on here. It should have held, but it might just be dipping below and then reversing. So I just be ready for that potential, because you're right at the that level. You're right at that level. You're still within that level. You haven't broken through that level completely. And the last brick here has tremendous amount of volume. See, look at this. You see this? Big green? That's on the test of the breakout, right? So something's happening here. I don't know what, and I don't really care. I mean, as soon as it reverses, and then over here on the SPY, you have a green, green, green. That's also a good sign, and they're basically testing the breakout. So you see it on the daily chart, you see it on the Renko, etc., right? And now I'm taking a look at the internals, the market breadth, which is another, it calls tops and bottoms left and right. So last springboard was on 323, initiated a high. The latest pullback has been about 524. So on that pullback is 524. I don't see any damage. I don't see a trend turn. I know folks are talking about trend turn. Based on what? What evidence do you have? I'm telling you, I'm taking a look at the stocks. It's only 524, and the other one is 660 on the New York Stock Exchange. So you cannot say that the market's turning down. It's a pullback. Why? It hasn't even taken out the low. So it's all bullshit. The trend is intact. The daily trend is intact. It's a breakout test. And until there's heavy selling in the stocks, you cannot make that that it's turning down and all that shit, because there's no evidence, zero evidence. The stocks don't say anything. The SPY doesn't. In fact, you have a breakout here and a test. So this is bullish behavior. And here, you see how much of a pullback and whether this reaccumulation over here is going on. Look at this volume spike here. Look at this. So what I'm thinking is this possibility of reaccumulation against this test of the breakout in order to go up. And if it is, then get in. So just wait, and nothing. And you can see very clearly, last time it had some distribution. It was right here, and then it had a breakout, meaning these guys failed. You see the ones that caused this downwave? They failed. You know how you know? Look at the wick. Against this area, they wanted to sell, right? Right? I don't know why it's doing that, but you see the wick right here? On this, they tried to sell. That's what the wick means. They tried to sell, but buyers reversed it and made a high. So, I don't know how much lower it's going to go. You just don't know until the buying comes in. But definitely, I don't see any reason to worry at all. For bulls, I don't see any reason to worry, because now if these numbers, the selling pressure gets exceptional, right? And you'll know by the amount of stocks that are selling off, then it's a different story. But unless that happens, the indexes are intact. All right, let's move to the next chart. We'll take a look at this ES. There's a lot of sideways action right now. Folks think that this is sideways chop on a Friday, right? Saying, oh yeah, this is just sideways chop. Not really. There's something going on because this is exposed by the volume in this brick, which is bigger than the last 100 bricks. So, I mean, look at it. It's right there. Yes, intraday, it's going to look up and down, up and down, up and down, but that's how accumulation looks. That's how reaccumulation looks. That's how cause looks. That's what happens within ranges when there's accumulation going on now. I'm not 100% sure, but this is still bullish structure. Bullish trend, you have this breakout, test of the breakout, right? At this level, and look at this. It just did a spring against that same low. It did a spring. This move here is a spring of this low, which was on April 14th. So April 14th low was taken by that little dip. The April 14th low was taken by that wave. And from that wave, you had a high, taking out the prior two highs here. So something's up. And you can see on that spring how much volume accumulated. So something's going on. I don't think this is bearish at all. I think there's some buying going on, and this is your spring leading to a break, and we'll see what happens. Anyway, let's move to the next market. Oh, and I wanted to show the trade. There was a minor trade that was on, it was actually, I think, on Thursday. Yeah, it was on Thursday. Right, it was fairly easy. You know, you just needed to get out quick, you know, because, but in this area, you had the market, it got oversold, right? It went down, it got oversold. Now, oversold, I don't, by itself doesn't mean shit, right? Because it's totally random. Shorting of the thrust and oversold by itself, you just do it programmatically, it's totally random. And you have to, your judgment is actually a filter on these indicators. That's what the conclusion I've come to. If you combine your judgment and then you see where it's supposed to be oversold or shorting of the thrust, then it becomes a very strong signal. All right, so I know that this is the pullback level, right? So if it gets oversold at a pullback level, then it's very meaningful. All right, because as you know, you have minor climaxes. So, you know, every Wyckoff trader knows or should know that. So you had this oversold, it starts moving sideways, does this, takes the spring. All right, it takes the spring of this low here. Okay, it takes the spring, rejects, tap, tap. Then there's something very interesting that, again, as a Wyckoff trader, you got to know how to read the bar chart and know these behaviors. It's not just candle patterns, but knowing this behavior is critical. This thing right here, you see that? That right there, it goes sideways, 1, 2, 3, 4, 5, and then followed by that strong break, right? 1, 2, 3, 4, 5, going sideways. It did hit the spring, test 1, test 2. Then this thing is called a hinge. Hinge and then break. What this hinge means, and you will see this on all types of charts. I've seen it on point and figure. I've always seen it on bar charts. The idea is just to be able to distinguish what it means from just random behavior, right? And that requires judgment. But anyway, what that means is that is the period which ends accumulation. That hinge, that sideways movement followed by that break, that means accumulation is done. That's what it means. There's the same type of hinge that you see on point figure where you have XO, 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 or, you know, just within 2 boxes. So, and then the market breaks. Anyway, so that right there was the hinge. And what confirmed it was the break with the big bar with ease of movement, with follow through, and all together being the highest in 24 waves. So that means that it's in markup. So you have to get in on the markup, right? So the entry was right here on this pullback where it tested that hinge, and the wicks and all of that is telling you that, you know, it's going to go, and it did go. And it went all the way up here where it stopped at the overbought. At least for me, the way I view it and the way I use it is it's very hard. One of the hardest things, if you've identified how to enter the market, right? One of the things that are really challenging is how to exit the market with a maximum amount of profit. It's really hard, and you can really screw up the entire trade if you don't know how to exit. Right, so what most people will do is they'll just put the stop below the low, like the pullback low. But if you know how much money you're going to lose if it comes back down there, you get stopped out, is you're going to lose a lot of money. All right, so if instead of getting stopped out, another approach is to get out on the up wave instead of getting stopped out. So if you're long, you want to get out on a strong up wave or weakness up wave instead of the price going all the way back down, taking out the rally low and then getting stopped out. So there are two things you want to look for. One is overbought, overbought climactic moves. And the second thing is shortening of the thrust. These two signals can help you get out near the highs. If you're long, they will help you get out near the highs. Okay, so overbought here, you should get the hell out right there. Why? Because if it pulls back, it's going to be a deep pullback and you're going to lose a lot of money. So you can just get out on the up wave instead of getting stopped out and waiting for possible reaccumulation, and then it might have another leg up, might not have another leg up. You don't know, right? Same thing with these guys. They were short, right? If they didn't get out on this oversold signal, right? You see where it says oversold? If you're short and it gets oversold, get the fuck out. You're going to get really greedy. And if you don't, it can move against you, and look at the amount of capital you can lose if it comes back all the way to the high here and stops you out above the pivot. So when it's oversold, there's likelihood of reversal or giving back all the profits and waiting for you to get the stop. I know some folks, they just want to get stopped out and they want to hold, but you're really screwing up because you can lose a lot of profits that way, and I've learned that the hard way already. So when you're profitable and you have an oversold wave, you get out get out of your shorts in extreme weakness, get out of your longs in extreme strength. Using overbought and oversold approaches, just get out and getting out. And if you're long, you want to get out in strength, because if you get stopped down on a deep pullback, you're going to have a lot of capital which you gave up, and even if it does pull back and you see the pullback is weak, you can even re-enter, right? You can just re-enter. So if you know how to do that, why lose all that profit? So overbought and oversold signals are, they're not signals to establish the position, they're signals to get out with a lot of profit. And like over here again, it goes oversold. Get out. I mean, look, if you don't get out, look at this rally. It's going to take out your stop, and you're going to lose all your profits. So why get into that shit, right? Anyway, so where was I? So the ES right here with this heavy volume break, biggest volume in 100 bricks, something is going on. How do I know? It's doing that on a deep pullback, and the selling pressure is very weak. You see, it only lasts 2 bricks at a time, and it's at a support level, and then there's volume coming up, which means that it is possible reaccumulation to do another run towards the highs, and that's what I'm looking for. All right, so we'll just wait. No reason to rush. I don't know if this is the change of behavior and that's a spring. I don't know it yet, but because it's very choppy, don't know it yet, but we'll find out. And let's take a look at the next market. All right, on the crude, right? Again, you see where it gets overbought right at the high. If you're long, get out, because look at the pullbacks. Look at how deep they are. They would have stopped you out, or you would have lost this entire swing's worth of money. Doesn't make sense, right? So this is why the approach of just moving stops and trying to just get out until you get stopped out, I don't think it's a good approach. I think it's better to get out in a strong upper wave. Just get out. You could always re-enter on that pullback if you really are, wanting to reload, right? And you know what? That's what the CM does. What do you think reaccumulation is? They're taking profits in those big rallies, and when it comes back, it starts doing those patterns and holding and all of that. There's reaccumulation going on for the next move. So I think that's a better approach. Anyway, so what's going on in crude? Okay, so crude, there's this breakdown here. You see this brick with the biggest volume in 100 bricks? You wait. Once it tests that level, and we'll see if it reacts. So I have that level marked about 79.30. If it makes it around that area, there should be some type of reaction. That's against all of this. All of this, see all this? All of this juice, right? Where they were, I don't know what the hell they were doing, but it went down, and now when it comes up here, there should be something. I'm not saying it's going to be a big move or anything like that, but it will set up for, because someone is trapped here, right? I mean, when you see it take out the low, and then take out the high, then take out this low, so there's the shorts, then take them out at the high, then pull back, then I think test it or take it out, I don't know, and then take them out again. So both sides got screwed over here. So there must be trap traders here. Must be trap traders on the long side right here, above that high, or the pullback buyers that bought long here. So we'll see. As soon as it goes there, they're going to exit. Let's take a look at gold. So gold, I mean, I should have taken this one. I didn't take it because it's just looking weird. And also I didn't want to counter trend. It was just acting weird. But this was the level to go long, and this was a minor move here. Now what am I looking for here? I'm looking for, I don't know what the hell I'm looking for. But that 2015 is a very nice area. Where it is, up here somewhere. Around that 2015 area, there's a lot of volume there. There's also a lot of volume in 1997, I think around 1997. So we'll see how it reacts at these two levels. On the higher time frame Renkos, it is going right to support. You see this? This is the biggest accumulation brick in about 11 waves, followed by a breakout brick. That breakout brick was tested, went up. Now they're coming back to the accumulation brick with the biggest volume in 32 bricks, testing that prior accumulation area. So I want to see if this reaccumulates. From what I've seen so far, look at this. You see the selling? It's gone. So I want to see if they hold this level, right? So I want to see maybe a pullback here, and then set up some change of behavior or whatever, change of character, etc., and see if that works, right? So this is what I'm looking for. And I'm not convinced yet. I should have taken this for the bounce though, because this was the biggest moving 49 up wave. So when it tested, it would have had some type of bounce. Anyway, I'll just catch you on the next pullback. All right, so gold is in a very interesting spot on the higher time frame Renko. Very nice, pulling back, a little bit deep pullback, which I don't like, but I think it's definitely an interesting watch to reaccumulate. At the same time, there may be selling pressure, that heavy volume there. I don't know what it is. All I know is there's the biggest volume in 32 bricks, and it is meaningful because it is at support. So when you have that kind of volume at support level, it could be reaccumulation. But on the other side, it could be absorbing to break down that support. So you don't know that until you see the follow through, and from that you can then just trade the tests. Anyway, thank you. Have a good rest of your weekend.